Welcome back. Hope you're having a good morning. Well, we have overnight Qs in. We have already stated down all the top stocks that you need to look at. So let's get to some fundamental analysis as well. Deven Choksey, MD at DRChoksey, joins us on the show. Hi, Deven. Good morning. Well, need to ask you about the sector that's in focus. You have the banking names that have been doing very, very well. What's your view, particularly on HDFC Bank? And I ask you this because year to date, actually, the bank was one of the lone banks that was in the red, and that was dragging the banking index. Now, that's on the verge of moving into the green and maintaining its 10-year record that every calendar year for the last 10, it's given positive returns. Your take.
Hey, good morning, Nigel. Well, fundamentally, nothing wrong with the bank. Whatever you asked for, I think, is there in the balance sheet. You have a growth in the corporate lending book, which is close to around 20%. In the retail lending book, I think the growth is 20% and above. In housing finance, the loan growth is around 20% plus. And also the primary sector in which the bank operates. There also, I think, the growth remains in the double digit. So all in all put together, the bank's balance sheet and the portfolio, loan portfolio, remains quite balanced. It is not tilted either towards retail nor towards the corporate. So that gives you a good confidence, good satisfaction. On the other side, I think the major amount of challenge which the bank is facing, and I think that is a challenge for which the stock is underperforming, is about, I think, not having a strong digital front end. The customer acquisition process and loan processing activity, which is required to be done through the use of stronger digital front end called fintech, is missing in the entire piece. Should they build this particular piece faster? In my viewpoint, I think the bank would possibly move faster in expanding the loan book because of the size of the balance sheet that they have. There is no denial of the fact that I think the company is growing at around 20% plus rate of growth. So in next 4 years from now, the size of the book is expected to go in the range of 45 to 50 lakh crores, which could possibly place it among the largest in the world, probably among the largest in the world. So from that perspective, the stock remains underpriced on potential and the possibilities. The fintech is one missing pie. If it happens, then possibly the stock holds the potential to give you 20% plus kind of return in a shorter period of time.
All right, so that's your view on HDFC Bank. I wanted your thoughts on Reliance as well, Deven, largely because one, HDFC Bank was an underperformer, is now catching up. Reliance is still lower year to date. Nothing particularly wrong with the fundamentals, so to say, of the business as well. There is a fair amount of growth potential in their new businesses too. How long before Reliance starts to move too?
Yes, Mangalam. Good morning. Well, I think the important point out here that the stock fundamentally remains absolutely strong and convincing, be it in the conventional businesses of refining and petrochemicals, or for that matter, higher amount of growth in the oil exploration business. I think the company remains absolutely on a solid wicket and continues to contribute, if not more, around 50-55% of the total EBITDA pie of the company's entire book. On the consumer side of the business, the retail and the geo platform business, they also end up contributing 45 to 50% of the entire EBITDA of the company. So all in all put together, I think nothing wrong with this particular business. On the contrary, consumer-facing businesses hold a larger amount of potential since they continue to grow at the rate of around 20%, which is a steady rate of growth on such a large balance sheet. I would think that 2 or 3 technical factors possibly are hurting this company. One, the domestic fund exposure possibly has reached to a peak level, as a result of which I think they are unable to add further into the portfolio for the exposure purpose. And that is possibly one of the reasons. And because of this reason, I think the index funds which are operated by the FPIs, probably I think they find this stock worth shorting. And as a result of which, I think against the entire market rising, they also hold the short position. That's where Reliance comes in. In my viewpoint, I think once the renewable portfolio starts showing the commercial production, maybe in 24-25 financial year, we would see the larger amount of short covering led rally first taking place in this counter, and then possibly I think the appreciation. Fundamental remains strong, so I think we remain convinced on the fundamental side of the story. Market technicals could correct in a bit from now. So hopefully I think the things would probably settle down and the stock start giving you better return. Whatever it has not given in last 2-3 years, quite possible that in 6 to 8 months time, the stock has a tendency, it could produce more than I think what it has not produced in last 2-3 years. So one remains confident because of the strength of the fundamental at this point of time.
Okay, Deven, hi, morning. What about the Adani Group? You know, on Monday morning at 8 o'clock, we highlighted that the two spaces to watch is PSU banks after the election victory, and the other is Adani Group. I mean, stocks are up 40%, I mean, in some cases, in the last two sessions. This morning, Sudarshan was highlighting how a lot of brokerages, after I think a visit to the Mundra port, have revised their rating up on Adani Ports. But that's a well-owned institutional name. But I mean, you know, it's catching up with a lot of other names as well. You know, Green was locked up in 20%. I think there were 3 Adani names, limit up 20% yesterday. What do you like there?
Yes, Prashant, good morning. Well, I think if you look at the entire portfolio of infrastructure, within that portfolio, Adani Group has, I think, completed almost all the portfolios as far as I think their ground level installation and the expansion is concerned. Hereafter, whatever the further growth is happening, be it in the power segment, be it in the solar power segment, be it in the growth segment, I think they are incremental growth. What I'm trying to say is, I think at 60,000 crore worth of EBITDA at the group level, they are growing this particular EBITDA book at the rate of around 20%. And that visibility is permanent. I think it looks, I think, very clear that the growth is continuing at the rate of 20% on current capacities that they've built, be it in the area of port, roads, airports, or for that matter, the other infrastructure assets, including the railways, including the gas distribution. In my viewpoint, I think the company remains absolutely strong and convincing. Having capitalized the debt in last 6, 8, 9 months, I believe that I think they have corrected even the gap in the balance sheet as far as the leverage is concerned. And given the kind of current EBITDA, I guess I think the overall portfolio of debt, I think is comfortably met at around 2.5 times, I think, to the current EBITDA, which is not probably sounding any alarming. In my viewpoint, I think the stocks deserves re-rating. Of course, I think the speed at which they move, I think that definitely cannot be understood fully. But the fact remains that I think they would get re-rated given the strength of higher cash generation that these portfolios are offering to investors.
Okay, all right, Deven, we appreciate you stopping by and giving us your view on a whole host of stocks. We're wishing you a good trading session ahead and look forward to having a chat with you in the coming days as well.